Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at energy fuels.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comment section below.
So let's get into the analysis.
Let's do it. So, energy fuels, they've built a position that's, well, it's pretty much unique in North America.
And it really is. And when we start breaking it down, we have to talk about what analysts are calling the dual asset advantage.
Okay, the dual asset story.
Yeah, this is the key because it completely changes their risk profile, and potentially their valuation multiple down the line.
So it's not just one thing.
Not at all. I mean, they are, without question, the leading U.S. domiciled uranium miner. That's their foundation.
Right, that's the base business.
Exactly. But the diversification, the move into rare earth elements at scale, that's the real engine for future growth. We're talking about the critical minerals for EVs, defense tech, everything.
And it's not just that they have two commodities. It's about the vertical integration, right? Doing it all here domestically.
That is precisely where the macro tailwinds become.
Right.
Well, they become hurricane force.
Mm-hmm.
The energy transition isn't just about getting off fossil fuels. It's about securing the materials you need for that new infrastructure.
And nuclear is having a major moment. It's getting huge policy support, a ton of capital flowing in, especially in the U.S.
And that support flows directly to a vertically integrated domestic player. It's a perfect fit.
So they shift from just being a cyclical miner to an essential piece of national infrastructure.
Mm-hmm.
When you look at the policy, from energy independence to, de-risking the rare earth supply chain from geopolitical issues, this company is positioned right in the sweet spot.
That's a huge distinction. But, okay, even with those powerful tailwinds, we have to ground this in the financial reality right now.
We do. The long-term story is fantastic, but investors need to understand the near-term challenge.
The trough of execution, as they say. Exactly. And we have to be really clear about the potential volatility. Let's address the near-term drag that's expected in 2025.
Okay.
The consensus right now expects a pretty significant top-line weakness. Specifically, they're forecasting a 39.8% year-over-year revenue decline in 2025.
Wow. Okay, that's a number that will scare off a lot of people just looking at next year's statement. Why is that dip expected to be so sharp?
It's mostly about timing. The timing of project ramp-ups and maybe how they schedule their uranium sales against long-term contracts.
So it's lumpy.
Very lumpy. When you're transitioning a business model, moving from, say, selling stored uranium to generating real revenue from new rare earth processing, you get these nonlinear figures. 2025 looks like the year that absorbs that transition.
But, and this is the important part, here's where the story gets really interesting for anyone who can look past that dip.
This is the whole thesis right here. Look ahead to 2026.
The rebound is staggering.
It's massive. Analysts are projecting a huge comeback. Revenue is expected to grow 85%, potentially hitting $87 million in 2026.
So nearly 40% drop followed by an 85% gain.
Right. That swing shows you just how much growth is coiled up, waiting for the execution on these rare earth and uranium ramp-ups. It's a classic bridge year setup.
And we see that same story on the bottom line too, right? It's not just revenue.
Precisely. It speaks to the operational scale they're expecting. Now, the company isn't projected to be profitable just yet, but the trajectory is improving fast.
Okay, so what are we looking at for losses?
The expected loss of 35 cents per share in 2025 is projected to narrow significantly to just a 6-cent per share loss in 2026.
That kind of improvement doesn't just happen. It points to real confidence in margin recovery.
It does. It signals that as production volumes ramp up, particularly in rare earths, the efficiencies are going to kick in.
And during a year like 2025, a bridge year, as you call it, financial resilience is everything. How's their balance sheet?
They're actually in a pretty good position, especially when you compare them to some smaller peers in the sector. They have moderate leverage, a manageable cash burn.
So they have the runway.
It looks like they have the runway to get through that 2025 dip and execute without facing some kind of liquidity crisis.
Okay, so the fundamental story is clear. 2025 is the headache, 2026 is the catalyst. Let's pivot to the technicals because the market often prices this stuff in way ahead of time.
Oh, it absolutely has. The stock has been on a tear this year.
What's the current price?
It's sitting around $12.78 as of November 22nd. Now, if you look at the 52-week low, it was $3.20.
A huge multi-bagger gain already. The market clearly believes in this story.
It does. Let's talk about the health of that rally, though.
How strong is the trend?
It's what you'd call confirmable. The stock is trading well above its 50-day and 200-day moving averages.
Yeah.
And that 200-day exponential moving average, which is sort of the baseline for a long-term trend, is way down at $7.14.
Right, so trading nearly double that level suggests this is more than just short-term speculation. It feels like institutional money is behind it.
It does, but we have to talk about the risk profile here.
The ride you're signing up for.
Exactly. And there's one number you need to focus on, the beta.
Which is high.
Very high. It's 2.05. For anyone listening, that means if the S&P 500 goes up 1%, this stock, in theory, moves up 2%.
Which is how you get those outsized gains.
But the reverse is also true. If the market pulls back 1%, you have to be prepared for this to drop twice as hard. It is high risk, high reward. It requires conviction.
So for anyone looking to manage that volatility, what are the key technical levels to watch?
Well, we're seeing a short-term trading channel forming between about 1092 and 1340.
A consolidation phase.
Which is healthy after a run like this. Analysts are suggesting that dips inside that $11 to $13 range could be attractive entry points as long as the company keeps delivering on its catalysts.
Speaking of catalysts, let's talk about some of the recent internal shifts. There's been some movement on the governance side.
Yeah, a few things to keep an eye on. Over the last couple of months, we saw the resignation of Director Robert Kirkwood back in October. And there were also some Form 8K filings detailing other board changes before that.
And why should an investor care about a director stepping down?
Well, transitions happen, but when you see a few changes together, it could signal the board is reshaping its focus, maybe moving from a development-heavy board to one that's more about commercial operations.
As the projects come online, makes sense.
It does, but you just want to monitor it. Board stability is key during a big strategic pivot like this.
We should also mention insider transactions, just for transparency.
Right. Institutional interest is definitely up, which is a great sign. But there was a planned sale recently of 150,000 shares.
I'll do that.
About $2.3 million. It was a planned sale through RBC, and the seller said they had no knowledge of any undisclosed negative news. But
it's something you monitor.
You just have to. It's part of the due diligence on a stock like this.
Okay, now for the hard dates. The catalyst that will definitely move the price.
The big one, the immediate focus, is the Q3 2025 earnings release. That's scheduled for November 26th.
And what's the market looking for there?
It's not just the top-line revenue. They'll be digging into realized uranium prices and, more importantly, their rare earth sales volumes. That's the first real data point on how this dual asset execution is progressing.
Then after that.
Then in December, you've got institutional flows. The uranium ETF quarterly rebalancing is on December 13th.
Which can create some short-term noise.
It can drive a lot of liquidity and cause some price dislocation, yeah. Then in early 2026, we'll get the 13F filings.
Which is where we see who's been buying.
Exactly. It's the clearest sign of whether the smart money is really buying into this growth story for the long haul.
Okay, let's get to the most exciting part. The speculative upside. You see a street high price target of $27.50. That's over 100% upside. What could possibly unlock that kind of value? That kind of target implies a major re-rating of the company, and that usually requires a big strategic validation or a policy trigger. The chatter is focused on two main areas.
Let's start with the rare earths rumor.
There's a lot of talk about a potential strategic partnership on the rare earth side.
So teaming up with a major industrial player.
Exactly. An alliance to accelerate their downstream processing. If they secure a big, long-term offtake agreement or a joint venture, it instantly validates that entire business line.
And the policy trigger. This seems even bigger given the U.S. focus.
This could be the real game changer. The idea is that they could secure a major U.S. government contract or a big grant from the Department of Energy for domestic uranium supply.
A de-risking event.
A huge de-risking event. It would guarantee demand for a big chunk of their production for years.
What about M&A? Is a takeover scenario part of that 2750 target?
There's definitely unconfirmed chatter about it, and it makes perfect sense. M&A is heating up across the entire critical mineral space in North America. And a company with both domestic uranium and rare earth processing.
Is an incredibly strategic asset. If one of those big government contracts materializes, a suitor would have to pay a massive premium to get control. The stock could pop double digits on that news alone.
That really pulls the whole story together. So, to bring it all home, we have this really clear division for investors.
We do. On one side, you have the near-term revenue volatility in 2025, that's the speed bump. And you have management needing to navigate these corporate transitions.
But on the other side, you have these overwhelming structural tailwinds.
The global nuclear renaissance, their unique U.S. critical minerals position, that massive 2026 growth forecast, and all these policy levers just waiting to be pulled, the runway is huge.
So the opportunity is to capture that multi-year growth, but it requires patience to see past the 2025 numbers.
And conviction that management can really execute on these big project ramp-ups. The next few months, especially that earnings report on the 26th, will be decisive for confirming that whole long-term outlook.
Thank you for tuning in to Smart Wealth with Joshua. Don't forget to subscribe so you don't miss our next analysis.